It is June 27th. It is a Thursday, and this is the video log that takes 30,000 to a million. It's definitely going to happen. Now, after I take you through the account, I'll show you all the updates of what happened today, and I'll talk a little bit about portfolio balance and how it's important to be able to sleep at night. And so you want to have the right risk tolerance in there. And also, I'll talk a little bit about having a premise or two whenever investing. And of course, I'm taking this account to a million by managing money and not by, taking a huge risk on a stock like Nvidia or something like that and just keep piling on until it gets to a million. So this is a little less risky way of doing that. All right, it might take a while though. I don't know how long it'll take. Hopefully not too long. It's a long journey. I've already been at it for about a year. On August 18th, I'll have my first year. I'll do a video on like the review, how the year went, and I'll review the account and see how it goes. But let's dive in here and we'll see the account. I'll show you the big movers of the day. It's been fairly stagnant. Nothing much going on. There's a couple events on the horizon, like trade negotiations, of course, ongoing, and Fed announcements about cuts and all that, but nothing really that significant, nothing really that I care about. Well, I mean, I care about it, but nothing really that matters that much as far as the markets are concerned. So, big movers. C-SPAN recently was forced. I cashed in on basically I was forced to buy C-SPAN at $10 per share, 200 shares, because of course I had sold a put against my money for that company. I used to own it, and now I own it again. And I'm trying to collect some time difference through options. So of course I've already sold calls against C-SPAN. So you can see that I'm up $20 on that, even though my stock is down 50. So C-SPAN, complicated story there, $50. Next big mover here is Realty Income is up $18, which is nice. Wheat and precious metals down 42, but again, of course, I have options sold against that as well. So even though there's a downturn, last time actually the video log that I made was talking just about this. See how the option's up $21 and the stock is down 42. The options sometimes can act as a cushioning, as a dampening effect to the market moves. So go back and check that video out. And then we have Chemical down $20. Now URA is I have not a much bigger position, but I have a bigger position. It's moving less, which is kind of interesting. Chemical $20 down, and everything else is pretty much flat. Overall, an extremely flat day today. Even Apple is very flat. It's only down $12, which amounts to 0.03%. It's not that big of a deal here. So if you take a quick glance at the account, I've got $25,000 worth of Apple right now. PCY, which is an emerging market bond fund, over $5,000. RSX Russia fund, wheat and precious metal 3,000. It's a silver and gold royalty streamer company. URA, which is the uranium sector ETF, business ETF. GSY, which is the short-term treasury bonds. Very little yield, but doesn't move with the market. Basically, this fund here and the PCY, I'm kind of keeping it there just in case I need to put more money into Apple or EXK, and that's what I'm going to talk about in a second. So, and then various smaller positions like EXK, Energy Fuels, etc. Let's scroll down the account so you can see a little bit clearer. So this is by total return, which is not that relevant really. You can see Apple, wheat and precious metals. Percentage return, wheat and precious metals is actually bigger, right? So, but this is total return. The uranium business ETF is dragging me by a lot. Now, these numbers are not accurate from the start of the account or even from the start of August 18th when I kind of took on this project a bit more seriously. because I've sold and bought a lot of stuff, right? I've sold things like C-SPAN used to be a winning stock, and I have like 300 plus earnings from there, but realized earnings, but they don't show up here, right? Because I just rebought that. I sold it and rebought it through options, so it won't show. And same thing with the negative. I had an emerging market fund that was losing money, and I sold that, and so I don't have that. It doesn't show up here on the account, so we can't really look at that. It's a bit misleading as far as to see which ones are the biggest earners and losers throughout the course of the account. This is probably more relevant information, more curious. You can see my biggest holding is Apple, right? All the holdings here are listed. Same thing I went through over here with this little circular, cool little chart, but you can see it laid out in a list fashion. All right. If you need to go look at it, you can pause the video. So now what I want to talk about is first things that will help you sleep at night. I think it's really important. Oh, by the way, cryptos. Bitcoin off of its high here, 15%. Ethereum. I don't trade cryptos. I don't cover cryptos. I understand them very well, but I don't want to do. It's just not. It's not for me. It's not my style. It's like I do like to take a lot of risk, but it's not my arena, right? I want to trade things that have like real life asset tied to them, right? Even if it's just physical metal. But I don't even trade gold and silver. I trade the miners, right? Because they have a product which is the gold and silver, and they have earnings and all that. So anyway, nothing against cryptos, but it's just not my arena. All right. Now I do have a little bit of Ethereum here because I just want to, look at it go like this every once in a while. And when I turn on my account during the weekend, something's happening, right? Things are ticking, like a couple pennies up, couple pennies down. All right. Anyway, so what I want to talk about here is, the importance of being able to sleep at night. So I think it's really important for you to be comfortable with your risk. And at any one point, you shouldn't be like super nervous sleeping through the night when you're managing money. Like when you're taking on huge risks and you're willing to deal with that, then fine, right? Like let's say you're betting on one thing for the big money, big pop. You want to go from 1,000 to 100,000 in like a few weeks or a year or whatever by betting on Bitcoin or Nvidia or some other pot stock or high flying stock, beyond meat. It's fine, but for money management style, I don't think you should be ever in a position where you're too nervous about your allocation, right? And by the way, I'm not a professional of money, I'm not a professional financial advisor or anything like that. So do your own due diligence and do your own research. Don't listen to some random guy on YouTube. I'm just sharing opinions for entertainment and out of interest. I think it's interesting to see how other investors are doing what they're doing. I like to see. I'm browsing, YouTube, and to see how other people are doing, what their strategies are, and what kind of approaches they take. I'm really interested in what others are doing. It's kind of the part of the motivation why I started this is so I can share what I'm doing with others, because I thought that brought value to me. Like I was really interested to see how other people are doing. So anyway, finally to my point. So I think it's really important because of longevity, right? If you can't sleep, you're not going to be able to last like that a long time. Things are going to go volatile with your decision making, with not just with your account. So it's really hard to stay robotic and more disciplined when you're having a hard time sleeping, right? So, and to determine that risk tolerance, I think what's important is to have a premise or two. My premise is that over the very long term, just historically proven over many, many, many years, hundreds of years, that markets are eventually, at least the indexes that are comprised of some of the top stocks, are going to go up. And so I want to have a rough, at least some kind of a rough correlation with the markets. So, and then to have an allocation of 55%, at least 55% long. All right, at least 55% long, and sometimes all the way up to 95% long. But I don't want to go below 95% long because for me personally, I would not feel good about the market going higher and me running counter that trend or standing still. So I want to always try to be beating the market, at least at the very least on the upside, but also on the downside as well. That's why I have not necessarily short, but at least some money on the sideline, which can be looked at as short, right? I mean, if you're not gaining, you're losing. If you're comparing to just one benchmark, which is the S&P 500 in my case. By the way, I think I'm losing to the market today. Let me go in here and we'll check. Today I'm down 0.2%. I think the market's actually up. Let's see. Yeah, it's up 0.35%. But for the week, month, year, I'm winning, so that's nice, I think. Market's down 0.79 on the week. And I am down only 0.48 on the week. And I'm also winning on month, 3-month, year. But anyway. So I'm trying to beat the market. It's very hard. Only 10% of people do it per year. 90% of people don't beat the market or go even with the market because they've just purchased S&P 500 index. But even if they did, they're still losing on fees, so they're not beating the market. But so if you're wondering what my allocation right now, risk tolerance allocation is, I'm probably about 65-70% long at the moment. So I have some things that could perhaps run counter, like my precious metals companies. You know, EXK sometimes runs counter to the market. Wheaton Precious Metals have considerable position. So I have some positions that run counter, but for the most part, I am definitely long. I have a large Apple position, right? I have 2 puts sold against Apple, against $40,000 to eventually buy Apple at a certain price. I think it's $200 per share on January 17th. And then I have a call sold against Apple, which is kind of bearish, but I also hold 126 shares of Apple, right? So overall bullish stance, except the call. Now I have a little bit of SH. Let me actually go to the browser so I can show you. A little bit of SH here, which is runs against the S&P 500. So I'm really looking to get rid of that, but I can't justify getting rid of it when the market's near all-time high, right? I would have to wait for it to drop a few percent in order for me to get rid of that. I have some other, I have a lot of calls sold against a lot of my shares, but for the most part, I have many things that track the market, like the Realty Fund, New York Investment Trust here, NYMT. This is another real estate fund, so some real estate, some emerging market funds, and I have some super dividend global funds. So I have plenty of things that run with the market, and a lot of things like uranium, for example, that is a good beta for the commodity markets. So it's pretty diversified. It's got a lot of long exposure, it has some short exposure. So I'm going to be shifting those things around as I read the sentiment in the market. But with this mix right now, I can be comfortable going on vacation, going away for like 5 months and coming back and not worrying so much about what's going to happen in my account. Do I have to manage it daily, or I might have to watch this thing so I'm not going to miss the opportunity to, buy or sell some kind of stock and trade some fund or enter some option plays. Like I can literally walk away from this for a few months and be totally fine and be content and be happy with my risk allocation and tolerance, right? I'm still going to watch it every day, but I'm just saying it's a possibility. I could go on vacation and walk away, right? So that's one of the features, one of the properties that I look for when I'm managing my own accounts. And I think it's very valuable being able to sleep, having the right mixture at the right time, and being positioned in such a way that you can walk away, right? If you're a trader, for example, what you would do, like a day trader, what you normally would do is, pull out and put everything in cash or in short-term treasuries or the money market account that's available in your brokerage, and then walk away. Right? So you're earning like 1 or 2% or whatever on your money inside your account, and that's it. You're not exposed on any overnight risk or over weekend risk because you're sitting in cash. So that's what you would do. But as a money manager, like, you can't do that. You have to stay through the weekends because sometimes that's when you get the most appreciation on your assets. Think about it this way, right? During the weekend, it's 2 more days of trading that are basically hidden. Everything that would have happened over the weekend happens on Monday. So they're basically hidden days, and there are 2 more days that your options have to depreciate or appreciate. Right? It's just 2 more days of trading, and you don't want to leave money out of the market over the weekend if you're a money manager. Like, that's silly. That's, the more you stay in the market, the higher chance you have of appreciation. All right, so those are kind of my premises. I want to be able to sleep at night. Market goes up over a long period of time. Never be under 55% long, roughly, correlated to the market. All right, so I just want to share some of those principles with you and just update you on the account. Nothing else going on, just kind of a standby. There's going to be some volatile days coming in. I'm not at an all-time high. I am sitting close to an all-time high. The all-time high was over here at 60,628. I'm only about $250 off. So not too shabby. I'm sure I'll reach it at some point. Maybe not in the coming month or two or a few weeks because of the incoming volatility, but we'll see. I might actually skyrocket higher. There's a positive resolution on trade or something silly like that. But it doesn't really matter. Stay the course. Keep going. All right. Good luck to you. I hope you all making tremendous amounts of money and are beating me and the S&P 500. All right. So if you are, let me know. I'm always curious to hear about all of your adventures in the investing world. All right. I think that's it for now. Peace out.